Welcome to Tokenized Living. Remember, all content shared here is for educational purposes only. Enjoy responsibly. Have you ever wondered why owning a piece of art, a property, or even a company is a privilege only a few can afford? Well, this largely boils down to the traditional ownership model that's been in place for ages. In this model, one person or an entity holds the entire ownership of an asset. It's like holding all the cards in a game. It gives you power, but it also limits the game's potential. This model brings with it several problems. Firstly, it creates high entry barriers. Not everyone can afford to buy a Picasso or an oceanfront property. Secondly, it restricts liquidity. If you own the entire asset, selling it can be a time-consuming and complex process. And thirdly, it limits accessibility. The world is full of potential investors who are locked out simply because they can't afford the high entry costs. Clearly, the traditional ownership model is not without its flaws. But what if there was a solution that could democratize the ownership of assets? Enter cryptocurrencies, digital or virtual currencies that use cryptography for security. They bring with them a revolutionary concept: fractional ownership. Now, you might be wondering, what exactly is fractional ownership? It's quite simple, really. Fractional ownership is a method where several unrelated parties can share in and mitigate the risk of ownership of a high-value tangible asset. This could be anything from a Picasso painting to a luxury beachfront villa. The concept isn't new, but cryptocurrencies have taken it to a whole new level. Cryptocurrencies powered by blockchain technology enable this fractional ownership. Imagine buying a fraction of a luxury yacht or a piece of your favorite artist's work, all with a few taps on your screen. Sounds exciting, doesn't it? But how does it work? Blockchain technology, the backbone of cryptocurrencies, plays a crucial role here. Blockchain ensures secure, transparent, and tamper-proof transactions. Each transaction or block is recorded in a public ledger, visible to all participants but not alterable by any. This transparency builds trust and mitigates risk, making fractional ownership a viable and attractive option. Cryptocurrencies, therefore, are not just about buying a coffee with Bitcoin or investing in Ethereum. They are about democratizing asset ownership, breaking down the high entry barriers that have always been a part of owning high-value assets. Cryptocurrencies thus break down the high entry barriers and make asset ownership accessible to everyone. So, what does this mean for you and me? How does fractional ownership change the game? Well, it's quite simple. Fractional ownership enabled by cryptocurrencies offers several key benefits. Let's dive into a few of them. Firstly, there's affordability. Traditionally, owning assets like real estate or valuable artworks was reserved for the wealthy. But with fractional ownership, these assets are broken down into smaller, more affordable pieces. So instead of buying an entire apartment block, you can buy a fraction of it, making ownership accessible to more people. Secondly, there's diversification. Instead of putting all your money into one asset, you can spread it across several. This could mean owning a piece of a Picasso, a share in a beachfront property, and a stake in a rare vintage car, all at once. This helps spread risk and can lead to more balanced investment portfolios. Next, we have increased liquidity. Assets like real estate or art can take a long time to sell, but with fractional ownership, smaller shares can be bought and sold more easily, making the market more dynamic and liquid. Lastly, there's democratization of asset ownership. Cryptocurrencies and blockchain technology make fractional ownership transparent, traceable, and trustworthy. This opens up opportunities for people from all walks of life to participate in markets previously closed off to them. It's clear that cryptocurrencies' role in enabling fractional ownership has the potential to change how we view and handle asset ownership. So let's quickly recap the role of cryptocurrencies in enabling fractional ownership. Traditional asset ownership has been riddled with issues: high entry barriers, lack of liquidity, and absence of a global market. Cryptocurrencies offer a solution to these problems by facilitating fractional ownership. This concept, which allows multiple individuals to hold a percentage of an asset, is revolutionizing how we view and interact with property ownership. Cryptocurrencies, through their inherent properties of immutability, transparency, and security, provide the perfect platform for executing and managing fractional ownership. They bring liquidity to illiquid assets, lower entry barriers, and create a global marketplace where anyone, anywhere can buy a fraction of any asset. But the benefits don't stop there. Fractional ownership through cryptocurrencies also enables asset diversification, mitigates risk, and fosters financial inclusion. Cryptocurrencies are not just digital money, they're a tool that can democratize asset ownership and open up new opportunities for everyone.